Okay, let's talk about how we account for the actual cost when we acquire a plant asset. Those are things like property, plant, and equipment. And it's actually a pretty simple concept. All the costs that are incurred getting that particular asset ready for its intended use and in place are going to be included as part of the cost of that asset. So this means, as you see, obviously the purchase price will be included as the part, but if we have freight costs, any installation costs, insurance, all those costs, getting that piece of equipment or that asset in place in a usable condition are all going to be included as part of the cost of that asset. And it's really important because that's the amount that we're going to see sitting on our balance sheet for that asset, and it's also the amount that we're going to be depreciating here a little bit later on. Any expenses that we have, for example, just normal everyday maintenance, like you take your car in for an oil change, those are expensed as incurred. Those do not become part of the cost of the asset. That also includes licensing, insurance that you carry for your business would not be part of the cost of the asset. Land improvements is another type of asset here. The examples, as you see, parking lots, driveways, fences, sprinkler systems, lighting. So any costs incurred getting those ready for their intended use, again, will be part of the cost of those land improvements. Here's a nice breakdown of the costs associated with land and land improvements. So if you bought any property lately, you'll realize you don't just pay the purchase price, but there's also usually realtor commissions, survey fees, attorney's fees, perhaps unpaid property taxes you have to bring current, title costs. If you need to clear the land and get it ready, again, for its intended use, those all get included as part of the cost of the land. And let me just add in here, land is not depreciated. So again, it's important that we'll make that distinction between land and other types of assets. Land improvements we've talked about already. Here's a quick example. You can see all these costs are associated with the cost of the land. It's not just the amount that you pay. In this case, we had to remove a warehouse. There were attorney's fees and real estate commissions. So the actual cost of the land is $115,000, not the purchase price of $100,000. Okay, let's move on to buildings. Again, very similar to what we saw for land. Purchase price, commissions, attorney's fees, closing costs, title costs. In this case, here's the big point, are the costs of repairing and renovating the building. So, for example, if we have expenditures for remodeling or replacing or rewiring the roof, floors, or plumbing, all of that is going to be included as part of the cost of that particular building. If we're going to construct a new building, we may have some architect's fees, building permits. There may also be some charges for interest for a bridge loan while you're having, or a construction loan while you're having your building constructed, all the payments for material, labor, all that would be included as well. We already mentioned quickly about machinery and equipment. So purchase price minus any discounts, transportation costs that may be incurred, insurance while in transit, sales taxes, commissions, installation is a big one not to forget, and then any testing to get it ready again for its intended use. Same thing would apply for furnitures and equipment. So here's an example of how we might actually handle that information. So we're buying a truck. The actual purchase price of the truck is $22,000. Of course, we have to pay sales taxes. In this case, it's $1,320. We put lettering on the side of the truck, so the actual cost of the truck is $23,820. Now, when we go to buy the truck, we're going to debit the asset, in this case, delivery truck, $23,820. We're going to debit the license expense and the insurance. Remember, insurance is prepaid. We can always cancel it and get our money back. So that's an asset. And then we will credit cash for the total of all three of those. Licenses and insurance are expensed as incurred. That's why they're not becoming part of the cost of that truck. Let's quickly talk about what happens when we buy what's called a lump sum asset purchase. Often we'll go buy a piece of land, it's already got a building on there. So we have to figure out how much to allocate towards the cost of the building, which is depreciated, and then how much to allocate to the cost of the land, which is not depreciated. And it's a pretty simple process. This particular example says that on January 1st, Matrix Inc. purchased land and a building for $200,000 cash. The appraised values for the building are $162,500 and land of $87,500. How much of the $200,000 purchase price will be charged to the building and the land accounts? So we'll just go ahead and add those two appraised values together. That gets us $250,000. We're going to take the appraised value of the land and divide it by the total appraised value of both pieces. And that tells us that the land should be worth 35% of the value that we paid. Do the same thing for the building. We take 162.5 divided by the 250 total. That means the building accounts for 65% of the purchase price. Go ahead and multiply those times the actual purchase price, and that will tell us, in this case, $70,000 should be allocated towards the cost of the land, $130,000 towards the cost of the